Good evening. This is Ken Long from Tortoise Capital Management. I want to give an example of the 551W pattern, the basic frame for Johnson & Johnson today. And so this file is 551W, that's the pattern. 2011, that's the year. 0627, that's June 27th. And JNJ is the symbol, Johnson & Johnson, and it's a frame. So this is our preparation for tomorrow. 551W is based on the idea that we want to trend follow and buy on dips very strong stocks. Johnson & Johnson's been one of the strongest in the Dow. You can see by the power in the 50-day moving average. But it has pulled back here lately, and today closed in a tiny white doji, and that's what sets up the 551W. So 551W, what's it mean? The first 5 means that the stock is up over the last 5 weeks. So today's close compared to 5 weeks ago is clearly up. It's down over the last 5 days. That's the second 5. And so today's close versus the close 5 days ago, 1, 2, 3, 4, 5. You can see it's pulled back. And then the 1, it's 1 day up or even. So it's either a doji where the close is equal to the open, or it closed slightly higher. And it's higher than yesterday's close, so that's our 1 day up. And then W on a Williams percent R basis, it's below the 50-yard line. In this case, it's minus 80, so that tells us there's a 2-to-1 retest based on a retest of the 10-day high. So the blue line is now what we're going to apply our standard frame. The blue line goes in first. That shows we're interested in stalking it today. Then we draw the red line. In this case, I've drawn it below the swing low from 2 days ago. And so the red zone would be below, looks like about 64.75. A failure through there would be an opportunity to go short. The yellow zone is that distance between the green line, which is our mechanical entry, or a nickel above yesterday's high, and the red line. So that's our risk here. Looks to be about 60 cents. If it opens inside that yellow zone, we can consider playing this tactically intraday using some frog techniques, but we would be buying it mechanically at the green line, about 65.6, with a 60-cent initial stop, and looking for a target of 67.5 for 2-to-1. Yeah, it looks like it would have to clear 66.5 really, but then we'd already have a 1R in hand, and that's a good problem to have. So 551W buys strength on measured pullbacks where we have a 2-to-1, and we have a mechanical trade here that gives us a 2-to-1 reward to risk ratio. That's the 551W pattern.